Good afternoon, everybody. Welcome to our live stream here today, live from the Prime XPT Trading Academy studio and my little trading dungeon here in Berlin, Germany. I hope you guys are all psyched. Today is the day, finally, the release of the US inflation data. And we're going to be live here. We are going to place also live some trades. And since we still have about 29 minutes until the data gets released, I want to start here by walking you through a bit my preparation. So I spent the week really thinking a lot of this, doing a lot of research. I've come to my conclusions. These are conclusions I want to share with you. I also want to show you how I did this research and how I built my hypothesis on the direction of trades I want to enter today, because before the data is actually released at 2:30. And yeah, if you want, you can of course use the chat here to chat with me. So I'm sure later on we are going to have some time also to answer some questions. I saw we have a little bit of a giveaway also on our Discord channel, where when you ask a question and take a screenshot of it, you can win a little bit of extra cash. And so let's jump right into it, because otherwise later the time keeps running away. Hi, everybody out there. Good to see you, so many, 20 people here live today. Great. So I want to walk you first through the process of how I've been preparing for this event. And of course, let's start with the obvious out there. Why is this such an important event, in my opinion? You probably have been noticing in the past months really that when it comes to trading, when it comes to positioning, everybody out there, including myself, is really only talking about interest rates and about inflation. Now the market seems to kind of have accepted that interest rates are going to stay at a higher level for a prolonged time until probably the end of 2023. Because the Federal Reserve Bank, the central bank in the USA, wants to use this to bring down inflation. So now everybody is eyeing the inflation numbers. Everybody is looking at, well, is inflation finally going to come down, or is it not going to come down? And because everybody out there, especially institutional investors, are eyeing this, this means it's kind of going to be a self-fulfilling prophecy. So let's have a look here what we are expecting today. So we are going to see two numbers. One is the core inflation rate, one is the inflation rate. The difference between those two is that core inflation does not include so much energy, for example, than the inflation rate. Now, what is this inflation rate? And it's, by the way, expected to come in at 8.1%. And like in a nutshell, what is going to happen if this number is going to be higher than 8.1%? So, for example, 8.5% or something like this, that would absolutely mean that we are probably going to see a crash today in the market. That would mean that Bitcoin might fall under those 17,500 US dollars, which in this bear market up to now was very low. We saw this already tanking quite by a bit. So earlier today, we were already at around about 18,500 US dollars. So you can see really there's a lot of pressure already in the market. We would for sure also see the S&P 500 dive to at least 3,400 points, in my opinion, maybe even a little bit lower. And you might remember here, I was talking a lot the last months really about the stock market election pattern that I found, that kind of the stock market under Trump and under Biden has developed almost exactly the same, you can say. And according to this, I expected back then that probably we're going to see another low in the S&P 500 in the beginning to mid of December. And I said back then this low would probably be at around 3,400 to 3,600 points. Now we have reached that already. We once bounced off here, actually ran up to the middle part of this Bollinger Band here and then came down again. The problem here really is now, do I have my chart pick here for you guys? Okay, good. The problem now is things are going to probably go very, very fast. We're going to see massive US dollar buying also if this number comes in worse than expected. So anything above 8.1%, especially if we see something like 8.5 or maybe even 9% or something like this, is going to be a disaster for the market. This is probably going to cause you know what many people have been waiting out there for a while already, this capitulation event, where, yeah, my mic is on, good, a capitulation event where really we see this one final massive sell-off in the market because kind of everybody is stuck up. I want to walk you through now how I intended to prepare for this event. So I wanted to make up my mind, is this number going to come in maybe higher than expected or lower than expected? So lower inflation rate really would mean something very, very good. And yes, I'm going to place trades here. In fact, I have already placed some trades before the numbers come out. And I'm going to show you my reasoning for this later. I saw there was a question about this just now. Where is it? Here, we had a question here. Would it not be too risky to place a position before the release? Would not make sense for the release and not lose anything. I'm going to place positions before that, but I'm going to share my reasoning on this. So there's of course, more than meets the eye, so to say, why I want to do that. So bear with me a little bit. Let's first look at, you know, what is this inflation? So in a nutshell, inflation just means you have a basket of goods and you're going to measure, for example, last year, end of September, what does this basket cost? And then you're going to compare it to what did it cost this year, end of September. And if it's higher, if prices have risen, so to say, you have a positive inflation. If prices have sunk, you have something that is called deflation. But deflation is really nothing we should care so much about. And for the USA, this weights the goods that are in there over different categories. There are three main categories that are especially important. The first one is housing, which consists or which makes up 42% of the whole weight of this basket of goods. The second one is transportation with 18%. The third one is food and beverages with 14%. Now, we have this basket here. Also, like this is all from the U.S. Statistic Bureau, so you can access all of this data also by yourself. If you want to put some research in that for yourself as well for next time. And we can even look in the different categories. So, for example, for transportation, these are all the different goods that are in this basket. So, of course, something like new bought cars or vehicles, used cars, gasoline prices, tires, airline fares, intercity train fare, ship fare, and so on and so forth, mass transit, so metro or MRT in some areas it is called. So what I did now, I wanted to have a look at some of those categories this week. So for example, I looked at housing, and one of the big components of housing, of course, is the rent price. So I had a look at actually how did rents in some of the larger areas in the USA, some of the larger cities develop over the course of the last 12 months. And I found something that, for me was really, really surprising, because you would think in this market with rising interest rates that there's pressure on the housing market. And there is pressure on the housing market. So if you want to sell your home at the moment in the USA, or as a matter of fact, same here in Germany, you kind of cannot expect the same prices anymore that maybe you were able to get like a year ago, 1.5 years ago. However, on the market for rentals, it's the complete opposite, because so many people were forced out of their houses because they cannot pay their mortgage anymore. The demand for rental property has risen by a quite large margin. If you, for example, look here at New York City, which of course is the largest American city, almost 9 million people living there, the price for a one-bedroom apartment over the course of the last year, the rent has risen by 33.9%. For two-bedroom apartments, 40%. If we look at the second biggest town here, Los Angeles, plus 17.6% and plus 14.8%. If you look at the third largest city here, which would be Chicago, plus 26.4% and 25.7%. So you can see in this densely populated areas that the prices for rent has risen by a lot. And I mean, 33.9 and 40%, even something like 20%. This is well above, the 8.1% that we are expecting for total inflation. And this is just one category. If I look at other categories, such as prices for new cars, for example, I could see like that the average price for a new car comparison end of September this year to 2021 has risen by 10.8%. So also above those expected 8.1%. The same is goes, for example, for gasoline also. If you end of September this year had to buy gasoline, on average, you had to pay in the US a 17% more, 17%, not 7%, 17%. So also above. And the list goes on and on. There's some exceptions to that, like airline fares have not risen so dramatic, for example. But I think you can kind of see already the direction I want to go. So what I'm really expecting here is that maybe we might be in for a nasty surprise today. Maybe we are going to see a number that is much, much higher than the forecasted 8.1%. Maybe, we are going to see something like 8.4 or 8.5%. And this would absolutely be disastrous. So my hypothesis for today really is, in a nutshell, that I think the number coming out is going to be worse than expected. I really spent a lot of time researching this today. However, of course, I also could be wrong. So we are later also going to see going to look on our plan B. Now, normally, and I'm very happy, sorry, I don't remember who asked that question, why I want to take position before the release of the number. I want to take position, of course, because if I'm right, I don't want to see like a movement of 100 points in the S&P against into my direction already, which I'm not going to be able to participate in, right? However, under normal circumstances, I do not really trade news events like this because they're a little bit always of a dice throw, of course. If the number is coming in, if I'm wrong with my hypothesis, if my research I've done here and the hours I've put into this is just not correct, and this is a possibility, of course, then I'm going to lose money on the position. However, I am willing to take this risk because if we look at how am I in general positions at the moment, I have to differentiate between my long-term positioning. And as you guys know, I've been more and more switching from cash US dollar again into so-called risk-on assets. So I've been buying stocks again slowly. I've been buying especially cryptocurrencies, especially Bitcoin already slowly, because I don't know where the bottom is going to be. But I said inflation is high. It seems to be coming down a little bit now at the moment for the past 2 months. Usually this pretty well corresponds, historically speaking, with a bottom in the stock market. A bottom in the stock market would automatically then also mean probably we are inbound for the next bull market in cryptocurrencies. So if I'm wrong and the number coming in is, for example, something like 7.9% or 7.8% or maybe even better, so an indication that inflation really is coming down, well, it's good for me. I'm going to lose, of course, some money with the short-term positioning I'm going to do today, but it's going to be nothing what I can lose in comparison to what I can win, because my long-term position, which makes up about 70% of my positioning, of my total positioning, is going to profit from this. Because if the number is going to be better, of course, we are going to see rising stock prices. So we are going to see probably S&P 500 going to 3,700, maybe 3,800 rather quickly. We are probably going to see Bitcoin quickly rising to 20,000. We are going to see euro dollar heading back to parity, to 1.0. We're going to see US dollar yen coming down again. So this is very, very important. Just for the pure speculation, of course, I would never risk something like this. However, if I'm correct with my hypothesis and the number is worse than expected, well, then I'm going to lose some more on my long-term positioning, of course, which does not really matter that much to me because it's a long-term positioning. It's not intended to catch like bottoms and tops of a market. So these are positions I intend to hold for the next maybe 3, 4, 5, 6, 7 years in terms of Bitcoin, even longer than that. So this is really why I am willing to take this risk today. It's really, really important. Now, if you maybe say, okay, this is kind of interesting, I want to risk here something as well, I want to trade along, or maybe you have a different opinion, you think, the number is going to be better than expected, so you want to buy the S&P 500, you want to long Bitcoin, US dollar, and so on and so forth, go ahead. But be aware really, and I really want to empathize this here again, that it's going to be probably a wild ride. And it's going to be a wild ride when the number is worse than expected. So if we see something like 8.5%, it's going to be a wild ride when the number is going to better than expected. The only thing that could happen and which is going to cause it to be kind of a non-event would, in my opinion, be if we really hit the number, the 8.1%. Then probably we for sure would see some movement, but for me that would probably be a reason to rather quickly get out of the market, because that for me would seem like, well, okay, it's going to be prolonged by another month. Probably the decision is going to be postponed when the inflation report in November comes out next week. So let's quickly talk about positioning here. And you can see I already built up here some little positions earlier. So I sold some S&P 500, sold some euro dollar. I'm going to shortly before the release do some more trading there as well. But I wanted to split the positions a little bit so I can later on, I'm not forced to close them all at the same time. I can kind of scale out of the market again. And as you can see here, I've deposited some money. I've also activated a bonus. So that is really, in my opinion, something you might want to do as well. So I used this bonus code you are seeing now here under my window, my camera, so to say, Academy October 22. And you can activate this when you go to your trading account, here to account. You type this in here, and you can see I did this earlier and got the 7% bonus, because after this I deposited 25K. So I have a nice bonus here today of 1,750 US dollar token, which allows me, some extra margin, some more flexibility in my positioning. So this is really nice to have. If you are eyeing on trading this event as well, or you want to do some trading here in October, please go ahead, activate this one. I think for events like this is really something nice to have. Yeah, okay. So let me see if we have some questions here already. I can see the chat is quite busy. So as a summary again, I'm willing to take this risk and speculate on a worse than expected number, because my long-term positioning is already quite risk on again. So I'm already long-term invested in stocks, invested in cryptocurrencies again, and I'm switching some of my cash also back to euro slowly. So if the number is better than expected, I'm going to massively participate on the upside there. So I'm willing to lose. I don't mind then losing 10 or 15,000 on short-term positioning today. If, however, I'm wrong, if however I'm correct and the number is really going to be worse than expected, that would mean that of course my long-term portfolio would lose by quite a margin. I don't care so much about this, because as I said, it's a long-term portfolio, but at least I'm going to have a little bit of a hedge, because I'm maybe going to win a couple of thousand here with a short-term trading, with a positioning today for the news event, and at least, it makes it a little bit better than losing on the long-term portfolio. So this is kind of my reasoning. If you are unsure about it, really, no pressure here. You don't need to trade this. As I said, I did quite a lot of homework for this week. But of course, like it always is in trading, I could be totally wrong. Yeah. So this is not so much about being right or wrong. This is a process. As a trader, you always go through. You do your research, you have a hypothesis, and then your hypothesis, like in science, is either proven right by reality or it's proven wrong. And I have two hearts beating in my chest today. I kind of wish that I'm wrong, because that would be good for my long-term portfolio. But of course, it would also be nice to see if I'm right here and the number really comes lower, because that means I researched it in a good way. My research was correct. All right, let me see a little bit here what you guys are asking. Question here from Aslan. Hi, Aslan. Thank you for your question. Do you think the decline will continue after the inflation data? Well, like I just said, if I'm right and the numbers worse than expected, then the decline for sure is going to continue. And then we are going to maybe have this capitulation event on the market, so that we have this final high, quite strong sell-off maybe for the next couple of days. This one we had earlier already, but Loveskins, cool name actually. Thanks a lot for this question. That shows really that you are not a beginner anymore, that you think about risk. And thinking about risk, of course, is an essential part for a trader. So do you think after the war ends, all this kind of data probably you mean will be useless? It's never useless, inflation data, economic data is always something you have to look at, because it's driving the markets. But of course, if the markets return to normal eventually, it will be not as much as it is at the moment, where everybody really is just eyeing fundamental data. So feels kind of at the moment, as if really the technical indicators and what else you use for trading is kind of useless. If it gives 8.3 or more, we look for the short, indeed. So if it's higher than the forecast, the market probably is going to tank. Absolutely. And it's probably going to be also quite dramatic what we are going to see there. This is kind of also an interesting question, in my opinion, because will the news, let me do the background here, maybe change to black, then it's better to see. Will the news today dump with BTC to 17K? So what would be really, really for me the best indication that Bitcoin has reached its bottom? That would really be if the number comes out worse than expected, and over the course of the next days, we are not falling below 17,500 in Bitcoin, because that would really show in an environment that is really toxic for stocks and cryptocurrencies, that Bitcoin is still able to maintain this level. That for me would be a very, very strong indication that probably we have already seen the low in Bitcoin. I have to eye here. Okay, we still have 7 minutes. Also cool question, Night Online. Hi Dirk, is the bull market more profitable, or is it in a bear market? No, of course a bull market is always more profitable. However, in a bear market, you kind of have to lay the foundation for the next bull market. In a bull market, everybody can earn money because everything is going up. And that's why you see on social media all this posts about, supposedly people that became millionaires overnight. And usually those people then suddenly disappear again when we enter a bear market. So the challenge is in a bear market to have your head clear and to kind of be brave and start reinvesting into something and not jump onto the wagon too late. This is why I have been, slowly switching from cash into crypto already again. I've been buying Bitcoin at 30,000. I've been buying Bitcoin at 35,000. And I've been buying it all the way down to 18,000, because obviously also I didn't know when is this bear market going to end, where's going to be the bottom. Here we have Anna hoping it's 7.9%. That for sure would be nice, because it would give us an indication that, yeah, probably we've seen the worst of, this inflation already. Good question here also from Carl. Hello, Dirk. The Fed says that it will continue to raise interest rates or even raise more. How will the crypto market be affected when we see a total increase of around 4%. Same like stock markets, the crypto market will probably continue to go down then, because investors always have a choice then between, I'm going to go for the secure, let's say 4 or 5% I'm getting, or shall I go for the risky 8% in stocks, for example. They probably will opt for the secure 4 or 5%. That's why we're at least going to see a continuation of a maybe boring and long sideways range. It doesn't always need to mean that, you know, everything will crash then, but maybe we're going to see, we saw something like this, I think like 40 or 50 years ago, where we have an extended sideways range for a couple of years, probably the worst that it can be, really, because it's going to be very, very boring with very few chances out there. But this is something that could happen then. And I for sure don't hope it, because for trading, obviously, that's something that is not so nice. We have another 4 minutes. So maybe let's go here quickly. So what is the market doing right now? So I want to sell here a little bit more euro dollar, and I want to go for another 25 S&P 500. So here we go. I've built up my position now. Let's see how it will be after the release of the data. We still have 3 minutes. Can still look at some more questions here from you guys. Barham is short Bitcoin. Very nice, Barham. Just be sure when the number is better than when the number is better than expected, that you have your stop loss in place. You don't want to lose money on a position that is already in profit, right? Yeah. Here, Night Online. Inflation data has a huge impact on Bitcoin. Shouldn't Bitcoin be kept separate from this? Yeah. Bitcoin is designed as a deflationary asset. So actually in high inflation environment, it should increase in value. However, the market perceives Bitcoin or cryptocurrencies in general as a risk-on asset, same like stocks. So is this going to change if we see continuous high inflation? It might be that sooner or later, you know, central banks, large companies out there are going to discover something like it would be wise to hold some of their reserves in Bitcoin as a hedge. Is this probably going to come sooner or later? I think it is. Is this going to be in the next weeks? No, we're talking about probably long-term effects here, maybe over the next 4 to 5 years. So we have to be patient there. But this is kind of the end goal for Bitcoin for sure, yeah. So 1.5 minutes. Let's see. To what price will Bitcoin fall when inflation increases? It's for me the 17,500. These is the line of last defense, so to say. So should this line be broken, I wouldn't be surprised to see something like 15K, maybe even 13K. Maybe not today, but over the course of the next weeks. All right, we still have now 45 seconds, so we want to get ready. I'm, of course, hoping that daily FX is going to update the numbers very quickly, and then we are going to see how the market is going to react, right? So, of course, we are seeing already some spikes in the trading. Here seems like people closing their positions. 15 seconds to go. This is really very exciting. As I said before, I don't trade news very much, but this seemed to me as a good idea. So let's see now if all my research is going to pay off. 4, 3, 2, 1, and here we go. Let's see. The number is not there yet. What is the market doing? So, euro dollar is tanking. All right. Where's my daily FX? Here we go. Number came in worse than expected, just a little bit worse than expected, 8.2%. and core inflation 6.6%. This is not as bad that I expected, but again, it's coming in worse than expected. And we can see here very well already euro dollar tanking like crazy. The S&P 500 is tanking like crazy. And this is exactly what I meant, guys. So we can see I'm up 4,000 already for my trades here. So what I'm going to do now, I'm going to close one of my trades in euro dollar. I'm going to close one of my trades here in the S&P 500. Here we go. So I took around about 2,300 in profit already. The rest I'm just going to keep open for now. What we can do now is we can, of course, secure our positions here with a stop loss. And I'm going to do this now with the S&P 500. Here we go. I don't want to share this trade now on social media. So you can see my entry was 3,616. So I'm going to put in a stop loss now at 3,610. Here we go. If the market rebounds, I'm going to do the same here with euro dollar. So we are up almost 100 pips already. So 30, 97, let's say 20. So should the market really, rebound now, and maybe we have a look here even at the 1 minute chart, you can see really the action there. Should the market now really rebound, that would then mean for us that we are not going to lose money anymore. We're not going to lose money on those positions anymore anyway, because the market did exactly, what I expected. So, and this is, a good example of why, in my opinion, it's like kind of important to do your own research, this is exactly now the countless hours I've invested in, maybe 6-7 hours I've invested this week to research for myself and build up an opinion where this number could come out, and to build up an opinion. I think it's going to be worse than expected. It's not much worse, it's just 0.1% worse, and same with the core inflation. However, it's important that the market, to note here, it doesn't matter that the number is just a tiny bit worse. What matters is that it's worse than the expectation, and the market doesn't like to be surprised in a bad way. Let's have a look here quickly also now at Bitcoin, which is, we are seeing here now an attack here. I'm quite surprised, actually. It's still holding up pretty nice. So before the release, we were somewhere at, I think, 18,700, if I'm not mistaken. So it's holding up quite well. Let's see how this is really going to be by the end of the day. Now, of course, I'm quite kind of happy now because, I on those short-term trades, my opinion was correct. I was able to earn some money here with this. And at the other hand, of course, I'm not so happy because I accidentally put this into the wrong one. Here we go. So I made 2,200, so around about 4,400 US dollars on these trades right now. Just now, so that's pretty good. We still have the same amount open here, but let's see if it's going to continue or not. Of course, I'm quite happy, that I was able to kind of earn this in a couple of seconds now. It's crazy, right? But on the other hand, of course, I'm kind of sad because it means we're probably still going to maintain those low prices and the pressure on the market, and we are not going to see as early as I would have wished a turnaround where the foundations for a new bull market in cryptocurrencies are laid out. I hope you catch my drift. Let's see how you guys have been doing. I have to scroll a little bit down here. So Barham, congratulations, man. I know you posted earlier that you shorted at 19,200. So you are quite up by a bit now with your Bitcoin short position. Well done, man. Anybody else did any trading here? Did follow or maybe, trade in the different direction? How was it for you guys? I'm scrolling through here. Alaya, how do you do you trade during this time? Yeah, this is what I was trying to explain. I don't know if you have watched from the beginning what I was trying to explain. You know, that I spent some time researching. I built up my opinion based on the data that I found, that maybe the number is going to be higher than the expected number of 8.1%. Then from this, I kind of thought, okay, what is going to happen for the market? It's probably going to mean cryptocurrencies are going down, euro dollar is going down, stocks are going down. And this is why I chose those trades that now you are seeing. And it seems like it's going to continue a little bit in the while into the direction. So maybe by the end of the day, if we are lucky, we actually end up with like 8 or 10,000 US dollars in profit there. So not too bad for a day. Of course, at the other hand, I would have wished for the turnaround for my long-term positioning. However, for my long-term positioning, this also means, you know, I still have some time to buy Bitcoin at cheaper prices, historically speaking, than I would have expected in the beginning of the year we would see here. So let's see, what is this here? 350%. Diego, you are up 350% with a position, or what does that mean? Here we have Bernard. I shorted Ripple and CVX going into the CPI, close in profit, long ADA from 35 cents. Well done, man. I'm super happy that you were able to make some profit with this. And Diego says, with his Bitcoin short, he has won the 350%. Well done. I mean, so this is kind of nice, you know, when something like when you spend some time, hours of research into something, and when it pays off, then you get rewarded for the work you have invested there. And I'm of course not telling you this because I want to brag about something like this. I want to, and this is the aim of this training academy always, that you kind of get an idea. How is Dirk, who has been done this for 25 years already, how is he preparing for an event like this? How is he building up his opinion? Because I see a lot of times, when I discuss with people saying like, oh, I think inflation is going to come in lower. Oh, I think inflation is going to come in higher. And when I ask them, yeah, okay, why do you think it's going to come in lower? Well, I don't know. I just have a feeling it's going to be like this. And, I want to show you here ways how you can do that differently, how you can also, with just a little bit of time and a really only used research material that you are also able to find with simple Google searches and with a little bit of time and dedication. Everybody can do this. You can do this. This is no rocket science, really. It's just a little bit of diligence, dedication, and even if you are working full-time, if you have to attend a job, from 9 to 5 or maybe even longer, this is exactly still something you can also do. It wouldn't have mattered if you would have built up your position already this morning or yesterday evening after you're done with your research. It would have been the same for you. So really easy to do for everybody. Of course, it takes some time to get into the flow. If you want to do that in the future too, and maybe you have questions on how to go about, you of course always have the opportunity to get in touch with us. You can do so either by writing us an email to academy@primexpt.com, or I think the best one is really if you join our Academy Telegram channel, because all this research that I showed you today, I posted already yesterday and this morning. Was it this morning? I think it was yesterday on the Academy Telegram channel. I shared everything there, and I also shared, okay, this is what I want to do actually tomorrow when the data is going to be released. So if you want to be, ahead of the crowd a little bit, do me a favor, join there. Also, do me a favor, leave me a like here and subscribe to our channel. This is always the best reward for us. If you now decide, hey, I really like what I was seeing there, and we kind of nailed this, then do me a favor, use the link behind underneath the video in the description of this video or in the comments to open a trading account with primexpd.com. If you use the link, you're automatically going to become a member of the Prime XPT Trading Academy, which means every now and then you'll also receive some special perks, and everybody in the company will see, hey, this is a student of the Trading Academy, and this is somebody who's willing to learn. And of course, the company is always going to reward that, because by the end of the day, that probably means you're going to be a long-term Prime XPT customer. All right, one more look here into this chat, and let's see. I shorted before the release. I need to turn off the caption here again. Here we go. Love Skins shorted before the release and closed it as soon as the dump stopped. Got a total 45% profit. Thank you, Dirk, for your analysis. You are very much welcome. Great that you made profit. Really, I mean, this is probably was like nice 40 minutes that you spent. Cool. Some more. Yeah, maybe last question here for today. Trading in such conditions is considered an adventure and requires a lot of courage. Do you think? Lina, absolutely. So even if you now see like, oh, wow, Dirk, has been risky, has built up quite some large position, has made a lot of money. But still, in the grand scheme of things, I would not have been risking here more than about 0.2 to 0.4% of my total positioning. Taking everything into account, cash, crypto positions, and so on and so forth. Of course, if you, let's say, have 5,000 on your hands that you are speculating with, and this is all your money, you never should go all in on an event like this, because it could have as well been here really that I'm totally wrong. That I did my research, but I did it wrong. I overlooked something there. My hypothesis was wrong. And this is why in the beginning I said like I wouldn't mind being wrong here, because that would mean my long-term positioning is going up, which is nice, which would have earned me even more money probably. But hey, if I'm correct with what I'm thinking, at least I'm going to have with short-term winnings a little bit of a hedge against the loss. So never speculate with all your money on an event like this. But of course, you could have done it also on a small scale. No need to short like 250,000 or 500,000 in euro dollar and 50 contracts of the S&P 500 here. Yeah, here, good question. Awais Khan, I don't know how to pronounce it, sorry. Nonetheless, a good question. In such news events, market has high spread too. What do you think about it? Absolutely. And this is normal. In events like this, the spread, so the gap between where you can, the price gap between where you can buy and sell an asset is going to widen, and this is completely normal in events like this. However, it does not matter, in my opinion, too much. I'm more than willing to pay a higher spread if that means, on the contrary, if a market like now really runs into my direction and we have a quick 100 pips in euro US dollar that we can take if I'm able to close the position there. I think this is really the important part. Paying a little bit of more spread here doesn't really matter. And if you trade a Bitcoin, for example, I mean, Prime XPT always has the spread where I think the highest I've seen lately maybe was like 10 US dollars or something, which is much, much lower than everybody out there. I didn't trade Bitcoin here today. Why didn't I trade Bitcoin? Because I saw Bitcoin ahead of the event of a news release already coming down. That's why I wanted to concentrate here on euro dollar and the S&P 500. Alrighty, good. Then we've ended. I'm, of course, later on going to update these positions again in the Academy Telegram group. You'll find a link underneath this video, this live stream, to join our Telegram group there. You also have the opportunity to always chat with me, so don't be shy. Send me your questions. We had really some great questions, and I'm always happy if somebody asks things, because that means you are serious about trading. And let's see how this now is going to continue over the course of the next hours and next days. And you know, guys, I'm going to see you again in a new video latest on Monday. Until then, stay safe, enjoy your profits. You know, maybe open a bottle of champagne and toast in my direction, please. And we're going to see each other very, very soon again. Take care, guys. Thanks a lot for watching, and bye-bye.